Hi, good evening, everyone. Welcome to today's webinar. Today, we have a webinar as part of the series of the Learn from the Pros educational series. So without further ado, just let me do a quick intro. Hi, good evening, everyone. Welcome. As some of you may know, today's webinar is part of the Learn from the Pro series of educational programs that we have that has articles and webinars. And we have 4 webinars in this series, and today's webinar is the last of the series of 4 webinars. And we were very delighted to have with us industry professionals. Tonight we have Mr. B.C. Low, who is Principal and President of Technical Analysis Consultancy. Last month we had Goh T. Leng, who talked about value investing. Ivan Ho has contributed a series of very interesting investing articles from a fund manager perspective. And Wong Kong Hao has presented to us in the first 2 webinars. So if you want to learn more about their webinars and the articles, go to the Learn from the Pros website. You can still find the articles there, as well as log in to view the video archives. So before we start, allow me to just share with you a quick video on the Driven campaign that we have running for all kinds of CGS-CIMB.
Think you're driven enough to succeed? Win a brand new Tesla Model 3 in just 3 easy steps. Open a CGS-CIMB trading account and start trading your way to awesome prizes. Participants can trade any of our 6 products to earn tickets. The more you trade, the better your chances. Earn as many tickets as possible from July to December to win the latest and greatest from Apple and be eligible for our grand prize, a Tesla Model 3. What's more, we've also lined up a series of webinars throughout the campaign period to help you become a savvier investor. Don't miss out on these free sessions. Register and level up your trading play. Open a CGS-CIMB account and start trading today.
Okay, great, fantastic. So this is the URL and the QR code. If you want to scan, it will bring you to the website. And if you are not a client yet of CGS-CIMB, fret not, just fill in your information in the register box, and our friendly colleague will contact you about account opening. And also, just to let you know that by participating in tonight's webinar, you also have a chance to walk away with $50 Takashimaya voucher. So this is a monthly draw that we have by engaging in webinars. That means keying in, putting up questions in the Q&A box, or just keying in chat, being engaged, and then looking through the websites and downloading the webinar and viewing our webinar archive. All these activities will earn you points or tickets. And towards the end of the month, the top 100 webinars attendees will walk away with $50 Takashimaya voucher each. So very easy to participate, very easy to actually win. So do participate actively tonight. And just a quick reminder, on your platform, you will see on your right-hand side 3 icons: the chat, Q&A, and survey. So for any message that you want to put to us, you can just key in the chat box. For any Q&A questions that you have, please feel free to indicate keying into the Q&A box. We will come to all your questions towards the end of the presentation. And also later on, we would like you to also do a quick survey on the presentation. This is to allow us to get feedback so that we can bring to you information and webinars in futures that you will want. So all these activities will, of course, helps you to also win to the $50 Takashimaya vouchers as well. So do actively engage. And before we start the presentation proper, then allow me to flash the disclaimer. So basically, tonight's presentation is for educational purposes only. Anything shared by the presenter are his opinions and does not mean it's investing advice. And for any investing information, please consult your licensed broker or financial planner. So without further ado, let me to introduce tonight's special guest, Mr. B.C. Low. So B.C. is the president and principal consultant of Technical Analysis Consultancy. He is a teacher, author, and practitioner in TA for many, many years, and started as a practitioner in 1989, and one of the earliest in Singapore to receive the Chartered Market Technician credential. So he has a long list of profile, and all I can list here is just some of it. So maybe later on you share more. But the point to note is he actually came up with a system of integrating technical analysis for the investor. So a lot of us think that technical analysis is only for trading, but actually you will learn from BC tonight that technical investing is also very, very useful tool for long-term investor. So without further ado, I would like to hand over the floor to BC. So BC, please go ahead.
Yeah, okay. Yes, yeah, thank you, Nixon, for your kind introduction. Very good evening to one and all, ladies and gentlemen. And first of all, of course, I would like to thank CGS-CIMB for inviting me to participate in this collaboration. Mr. Ong Wei Jie and Mr. Nixon Neo for facilitating this whole collaboration process. I'm very deeply appreciative of this collaboration. Yeah, the collaboration was actually for me to contribute a series of articles to learning from the pros. And yeah, so in 2014, I published a book to hopefully help investors to use technical analysis for investing. So this series of 5 articles on the Learning from the Pros platform was taken and based on the content of the book, selected chapters only. I spent 20 years educating young people in a local polytechnic on technical analysis and on trading. I left full-time employment with the Poly 10 years ago, and the past 10 years have been spent. My focus has been on hopefully providing my services in educating people who like to learn more about technical analysis in the investing process. So my passion is in education. Yeah. So when Nixon asked me to throw in a webinar to round off the online material, I was happy to agree with it to facilitate the understanding of what I shared in the writings. Some of you may have read the articles, maybe some have not. But in the series, the first and the last articles are, in my opinion, important for investors to understand. So this evening, it is not possible in 1 hour to sort of summarize everything. So I picked up the most important 2 topics, and that is the first and the last topic, because I think if you look at investors, they are longer term, right? And this is where I have been actually concentrating my efforts. Okay, so let me just continue to proceed with sharing. Yeah. Right. Everybody can see, I hope. Yeah. So that's the event for tonight. I like to describe myself as starting as a trader, then investor. I'm a chartist, educator, and an author. Yeah. The disclaimer again, want to emphasize that the temptation when I'm giving a presentation on charts is I may get a bit carried away, and I may sound like I'm recommending a particular action or view. I just want to make sure everybody understands that I am actually just sharing and hoping to share some ideas on the use of technical analysis, and not recommendation in any way. So as I said earlier, the 5 articles in the Learning from the Pros platform, part 1 trend, part 2 timing signals, and in which trend I covered my very original kind of a tool, 10 and 40 exponential moving average. Part 2 was trading timing signals and covered very basic 2 indicators. Everybody knows about them. Part 3, Bollinger Bands and 10 EMA. Yeah. Part 4 is integrating. Now, we all know that we have all these indicators here. 1, 2, and 3, parts 1, 2, and 3. We need to put them together and see how they work as a group for the investor. Now, part 4 actually is also very important, but it's impossible to do everything. But from the investor point of view, I think the part 5 is extremely important, looking at longer term. So time frames actually is about the longer term. Right. Now, some of you may be aware that Charles Dow is so-called the father of modern technical analysis in America. So according to Charles Dow, who wrote a lot of articles around 1900, that's 120 years ago, there are 3 trends in markets. There are 3 trends in market: primary trends, which last more than a year; secondary trends, which move against the primary trend, which can last from 3 weeks to 3 months; and finally, minor trends lasting less than 3 weeks. However, Charles Dow did not throw more light on these 3 trends. How to define the trends practically, how to define the trends further, right? So in my journey as a trader investor, I've always pursued the dream of coming up with a way to define these trends. I won't call them primary trends, secondary trend, minor trends. That was Charles Dow's original terms. But I think it's important for investors to be able to focus on the longer term, medium term, and the shorter term. But of course, the big question is, how do you define each of them? Yeah. So over time, I came upon a solution after working in it for quite a while, several years. So the result is that there has always been this gap in applying technical analysis for the longer term. An investor's nightmare, a trader's dream. Yeah. So I set out to try to define the different trends, right? And that is how I came upon timeframes. So I decided to write and publish, and I was happy to say that my article on timeframes was actually accepted and published in 2010. Well, that's 11 years ago. By this American magazine, which is the largest in the US, Technical Analysis of Stocks and Commodities. So this is my article, Trading Timeframes and Trends, and this is the actual article. You go to the National Library, I think you can still pick this up and read it if you want, but you don't need to do that now because I have written the full version in my book published in 2014. And of course, I've written it in the part 5 of this series for CGS-CIMB. So bringing it more convenient to you. Yeah. So the scope of this evening's seminar is 4 parts. A quick introduction, then I going through the trends, how the definition of trend, just in case there are people who did not read the articles. The first article, the first of the 4, 5 articles. Then I dive into the time frames approach for investors. And after I finish that, it's your market's time. It's your time to ask me to show the charts that you are interested in, and we will explore the markets with the time frames approach. All right. So that is my plan for this evening. So a quick introduction, then I cover the explanation of trend, then go from there is an important foundation for me to talk about time frame, because without the foundation of how we define trend, you cannot go on to do the time frame. Yeah. And yeah, so that's the plan. And then, as I said, the last part is for you to, I hope I can finish everything in about, well, by 8:30, about 8:35. I will move quite fast so that we can cover the material. Yeah. Okay. Right. So, so the first part is the introduction. I need to say very briefly what my philosophy in technical analysis is all about. As I said, I've been a trader, an investor, chartist, educator, and author, and well, actually, it's almost 30 years. For me, the first point is extremely important. All right, I think ethics is very important in this profession, right? I have to make sure that whatever I teach and share is something that I have found, tested myself, and found to have worked before I share with others. Otherwise, I think it's unfair and it's not ethical. So that is the first step in all my years as a practitioner in technical analysis. Secondly, I believe in making smarter and original use of existing tools. So there are many existing tools. I don't believe I have the talent to create many new tools. I have created some tools, but I have, I believe, made smarter use of existing resources in the technical indicators that are popular and easy to learn and easy to use. So we don't have to reinvent the wheel. Let's make a better use and a smarter use of existing technical analysis tools. I don't believe in a black box. I do not I do not really sell a system. Whatever I use, I have written about in the 2 books that I have published, right? In fact, the second book on market timing, I actually was thinking very long and hard whether I should publish it, because to me, it's actually a trade secret of mine. I've taken a long time to develop the ideas, but eventually, I decided that ideas would die with me if I do not share it. So I decided to publish my second book on market timing. So thirdly, lastly, I believe in 2 important principles in integrating the technical analysis in one time frame. And finally, using multiple time frames, which is the topic of what we're going to talk about tonight. Okay. Then secondly, what is technical analysis for the investor, right? I believe that it is about probability, not guarantee, never 100%. If you can get 60 to 70% of the time right with technical analysis, I'm happy. So TA is also about looking for evidence to draw conclusions about the markets, right? You cannot just believe, you need to show the signals from the chart. And so that's why at the end of this presentation, we need to look at indicators and see whether the indicators have worked and whether the approach has worked. Yeah. And of course, I believe that one should avoid having a holy grail mentality. There's no magic tool. There is no magic tool. Yeah. Instead, my approach is to use a toolbox approach. That means different tools, several tools for different needs. You have timing needs, you have trend needs, you have price needs. So use a toolbox, right? And along the way, after a while, you know, if you're familiar with technical analysis, you will know that each indicator has its limits. So accept the limits of each indicator. Even a very good technical tool may not produce good, clear signals all the time. It's not so much the indicator that is at fault, because indicator is just a formula, but it's more like the market may be uncertain, so it may not give you a clear signal. So this is my, you know, this is what I find over time. Next point is that I feel that there's no need for optimization, right? I use the same indicator, the same MACD, the same 1040 EMA for all markets. So because markets are markets is just prices, right? If it works with one indicator, it should work with if one indicator works in one market, another market is basically price, and therefore the other markets should be able to work with the same indicator. Yeah. And lastly, of course, TA works best in large liquid markets, and it will not be so effective in small illiquid markets. I would also want to say the same thing about timing. If you're going into the intraday, I think I'm not sure the effectiveness is as much. And I also must admit that I come from a generation of practitioner way before. You can see I started in the late 80s and the 90s. Intraday markets were not the big thing. So I can't really comment too much on intraday. So I would say that shorter term, harder to practice, right? Okay, having got that out of the way, I need to move on to second part of this presentation, and that is defining trend. And this is about the 1040 moving EMA, which was written about. So I'm going to go through not just for people who did not read the article, but also to refresh your memory, right? And to give me a chance to explain very quickly what this tool is all about, even though you may have some idea. Now, I put the words here, predicting the future, a very bold statement, predicting the future. And I choose my words carefully, right? Actually, I was a history graduate from Singapore University. And when I was studying history, our professors were very particular about the way we wrote. And well, I was trained that you have to be very careful with the words you use. But despite that, I'm telling you, I'm using the words predicting the future with 1040 EMA. Yeah. So what is technical analysis? It is the art of interpreting market action and signals to determine the market's trend, right? Extent of the move, and as well as its timing. So focus is on trend, timing, and price. And this is what I've been doing in the 5 articles, right? Integrating these would be part 4, and then long-term trend is part 5. So how do we define trend? Okay, very simple. Anybody would be able to follow, all right? Simple signal, simple tool. Exponential moving average. I don't have time to explain the different types of moving average, but you can read it from the articles. Uptrend is defined when 10 EMA is above 40. Downtrend is when 10 EMA is below 40 EMA. Congestion is defined as a situation when the 2 moving averages are crisscrossing each other. What is correction? Correction is when the price, right, trades towards the 10 or the 40 EMA. Right? If it's an uptrend, the price trades above the 2 moving averages. Correction, it will trade down. And if it is shallow, it should support at 10. A deeper will be at 40. So these 2 levels provide you with the correction objectives with the use of 10 and 40. I also add here that this definition of trend and correction can be used for all time frames. So this is a good thing about technical analysis. As I said, you can use the same tools, right, for all time frames, for all markets, and so on. So I always laugh when I tell people about technical analysis. Actually, technical analysis is for people who are not so smart. They can't do the economic analysis, so they just go on to technical analysis. So here I define a trend, all right? This 10 is a blue line, red is a 40 EMA, okay? This signals an uptrend, right? And this signals a downtrend. Here is actually a little bit of congestion. This is up to, this chart is from daily chart and up to sometime in August. I prepared this quite a while ago, but it's just to illustrate. So this is an uptrend, this is a downtrend. Type average, uptrend, downtrend. Okay, right. Congestion sets. Yeah, I think it's probably also sometime this year. The two lines are crisscrossing. And the price actually cuts above and below the moving average lines. And the two lines are crisscrossing each other, right? Okay, I need to add a little bit here that correction to the 1040, right? In a strong uptrend, price will only trade back to the 10, not to the 40. And it happens quite a bit, yeah. So if you're looking at IFAs and so on, in recent times, it hardly got below the 10. Trading back to the 10, trading down to the 10 was already a fairly sizable correction, yeah. But in a deeper correction, the price will reach 40, and it's not frequent. It's not frequent, such that sometimes if the trend is not a very big trend, right, there's usually one retracement to the 40 EMA, one retracement. I'm telling this because this is what I've experienced and I've observed over the years, right? You can always check it out, yeah. After a correction to the 40, especially, it is helpful to be able to see what the resumption of a trend is. What is the resumption of a trend? It happens in an uptrend, white candlestick crossing from the 40 to above 10. A downtrend is when the black candlestick falls back from the 40 to below the 10. So what do we mean by that? So in an uptrend, a correction to the 40, right? Correction, price will trade to the 40. And then resumption, white candle rising above the 10. Correction to 40. White candle above the 10. Right? White candle above the 10. Right? This is a shallow one. It stops at 10. This is a deeper one. Look out for some gaps if they happen. And here also you can see it was a small gap, white bar, white candle, and then followed by another. I would call this another gap, right? Runaway gap, and subsequently another correction. Yeah. So this is an uptrend. Downtrend, same thing. You can therefore see from these two charts. Of course, I picked the charts, right? There will be imperfections, but by and large, right, if you have been following the articles and you've been testing it, you'll be able to see, right, correction downtrend to 40, about the 40, it can penetrate slightly above, and then drop back below the 10. Black candle, some gaps, trade to 40, drop back, black candle, some gap, and the trend resumes down. And in a shallow correction, it doesn't break above the 10. Same thing. Then here, right. So that's the correction. Now, the 3 stages in the change in trend is very important, all right? Because this helps you and I to track whether a change in trend is happening, right? Because we are close to the market, we look at the price every day, we can monitor whether a trend is actually about to change. And we can break it down into 3 stages. The price crosses 10, doesn't matter uptrend or downtrend, then it crosses the 40, and finally, as the price continues to move in the same direction, the 10 crosses above the 40. So those are the 3 stages. Now, The change of trend to me is not a buy or sell signal. It is merely an indication of the future direction of the trend. That's it. Don't use that as a buy or sell signal, because buy or sell signal, I use the stochastics, right? So 1040, the cross is an indication of the future direction of the market, forecasting the future. So again, Thai beverage here, cross above. Okay, first stage. In change from uptrend to downtrend, the price drops. In an uptrend, the price is above the 10. In a change of trend, price drops below 10. There's one small one, and then there's a real one. And then it crosses below the 40. And as it stays below the 40, as the price stays below the 40, the 10 is pulled down and it leads to a change across, which is a change in trend. So the price breaks the 10, breaks the 40. The third stage is the 10 crosses the 40. Here is the same thing. Downtrend, price below 10. First stage, cross above the 10. Second stage, flirting around the 40. And it stays above the 40, even though it may not rise. You can see that the two lines are very close. So long it stays around the 10, the two lines are very close. And the two lines coming close together actually is a potential signal for a change in trend. And if the price starts to move, then the cross takes place. Same here, change from up to downtrend. Yeah. Now we get on to the third part of our evening's presentation, the time frames approach for investors. I need to cover the following points: defining time frames, the benefits of this approach, 4 time frame principles, and 4 time frame relationships. Right. You will appreciate that, as I said, the 1040 is the basis, right? Is the basis for correction, for change in trend. And that is the basis that we use to understand a change in the trend in the larger time frames. So as we all know, we can look at the daily, the weekly, the monthly, the quarterly, and so on. I'm crazy enough, sometimes I look at 1 bar 1 year. Of course, that's very, very big, it's a very blunt tool, but sometimes it's interesting to look at that. So effectively, I will tell you that the weekly, monthly are the more practical. But if there's a quarterly change in trend signal, then you have to be on the lookout for that. And I can tell you there's a very interesting chart. I'll show you a very interesting chart. There's a market, the quarterly chart, quarterly trend is actually changing. So you'll be curious what which chart is changing quarterly trend. In other words, the quarterly 10 is crossing the quarterly 40 EMA. Right, defining time frame is the principle of applying a market, analyzing a market over 2 or more time frames. You can go down to intraday. If you're looking at hourly, look at the daily. If you're looking at daily, weekly. If you're looking at weekly, you should be looking at monthly and even the quarterly and so on. So you must always not stay in one time frame. Always look at your larger time frame. If you're trading the daily market, daily chart, you must look at the weekly, even the monthly. If you are a long-term investor, you should be looking at the weekly, not the daily, because the daily is the noise. Look at the weekly and the monthly and the quarterly. So you need to avoid looking at just a very short time frame, right? The benefit is that it removes this approach. Now, I'm going back to what I started with. When I said Charles Dow said, oh, there's a primary trend, there's a secondary trend, all right? He didn't define. So what I'm saying is that if you use weekly, monthly, quarterly time frame charts, then it's very simple. All you would be doing is that you'll be looking at the monthly trend, the quarterly trend, the weekly trend, and that defines the trend. There is no ambiguity. The monthly trend is the monthly trend. If the monthly trend is up, there is an implication for the weekly trend. All right. There is also implication that you can draw that if the monthly trend is up, how long will it be up? We'll look at that. So once you apply this time frame approach, you can have a full range of views of the market's longer term outlook. And as I said, most people only regard technical analysis as a tool for short-term trading. I think that is an underutilization of the potential of technical analysis. So once we use the time frame approach, we can actually look at market tops and bottoms, like market tops and bottoms, right? Okay, we'll come back to that. 4 time frame principles. Principle 1, right? So this is to share with you how the different time frames, actually the larger time frames, behave, right? Okay, and the first thing is that I've said earlier on also, right? The valid signals of technical indicators are applicable in all time frames. So whatever indicator that you're using in your daily and you're comfortable with it, use it in your weekly, monthly, and quarterly, and so on. But you must have confidence in the indicator that you're using. Secondly, all right, this is very important. The larger the time frame, the bigger the move, and vice versa. It makes sense, right? The larger the time frame, the bigger the move. Okay, if you look at this stats, this monthly chart, this is the monthly chart, and this is a change from down. This is a change to uptrend. The monthly chart 1040 cross up in 2012. Wow, ancient history. Ancient history. And it remained uptrend until last year. Wow. Has anybody seen this chart? This is the monthly trend talking to you. This is the monthly trend talking to you, right? So you can see how the thing behave. The 10 is above the 40, the price above the 10. Any correction stops at the 40 month, right? Here, 40. And finally, the price crosses the 10, price crosses the 40, and then voila, there is 10 crosses down. And once that happens, there's a downtrend. So before that happened, the monthly trend was up. So in the same period, all right, if you look at the same period, this 2012 to 2020, yeah? So you can see the red vertical line and a red dotted line. Right? But the weekly chart is much shorter. It only covers the 2012 to 2014. I'm just giving you a short period of the entire phase. So the weekly chart turned up and it turned down. Right? Okay. So what are we saying here? The larger the time frame, the bigger the move. In the weekly, in the monthly trend, it moved from 340. It crossed down here at 403. Right? May not be big if you're looking at expensive stocks, but this is a fairly sizable move. This is a move of about 60 cents. Here, weekly crossed up to 224, and then it went up to 310. Right? A smaller move. But the same thing, the 1040, price is good at 10, stops at 40. The daily trend crossed in 2012 and it turned down some months later, and the movement is 240 to 290. So you can see in the daily trend, the trend can turn up and turn down, but actually the movement is much less, right? So the bigger the trend, the bigger the move, all right? Principle 3, the larger the time frame, the longer the trends last. Yeah. And just looking at the same chart, you can see 2012 to 2020. It's an eight-year trend. This is a 2-year trend. It's a 2-year trend. And this is an uptrend, and there's a cross down, and this is a, well, 4 months, it's a 6 to 9 months trend. 2 years, 8 years. So what does it mean? What does this mean? This means that if you have a monthly chart, if you have a monthly trend, if you have a monthly trend starting, you better be careful, because the monthly trend can last a very long time. A weekly trend can last a couple of years. Monthly trend can last several years. Whereas the daily trend, small matter. 小意识. For principle, the larger the time frame, the longer the trend will take to turn. Of course, right? If the daily trend takes 10 bars to turn, and the weekly trend takes 10 bars to turn, the daily trend will take 10 days, the weekly trend will take 10 weeks, and the monthly trend, 10 bars will be 10 months to turn. So you have to appreciate, you're talking about, these are the big guys, and they don't move as fast, right? The turn in the trend will be slower. So similarly, down here, you can see this is the weekly chart. Okay, took 7 weeks to turn. This one, 6 days to turn. City development. From the time the price dropped below the 10 here to the time the 1040 cross, 7 weeks, 7 bars. Here is 1, 2, 3, 4, 5, 6 bars, 6 days only, right? So you have to realize it, and you have to move away from this. If we are very daily chart based, we may get very impatient. We may get very impatient, or waiting for the turn. Oh, 5 days already are no turn. 10 days already are no turn. But this is a weekly chart. If it takes 10 bars, it will be 10 weeks. So you have to adapt. You have to adapt. Okay. Lastly, the time frame relationships. Okay, this is different from the principles. Okay, the principle just outline very important underlying things about time frames. Here we are talking about one time frame relationship with another time frame relationship. The larger time frame drives the smaller time frame. Okay, so when the weekly trend is up, the daily will follow. When the monthly is down, the weekly also quite will follow, because the big brother is there. The big brother say up, the small brother follow. When the big brother says down, the small brother will follow. True or not? This is SIA 2018 to last year. All right. The cross down 2018. And after that, the market fell. Look at this again. The price sticks to the 10. Shallow correction, the 10 is a very good indicator. 10 EMA. EMA, not any other. Most charts will give you simple moving average. All right. I don't use simple. This is the EMA I've been using for the past 30 years. So there's a cross down. Monthly is down. Right. What are we saying here? This point in time when the 1040 crosses down, the red line is here. Okay, 31st of July. Same. But this is in the weekly chart. So what do we look for here? You notice that the blue line represents the weekly trend turning down. and it turned down slightly earlier, right? Just about 10 days earlier, just about 2 weeks earlier. The shorter time frame trend will cross first, and then it will drive the longer one. And for this same period, you will see that the monthly trend is down, the weekly trend follow. The elder brother said down, younger brother better follow. Of course, you find that in a monthly trend, the price only stopped at 10, correction only to 10. But the weekly trend, smaller time frame, the correction went to the 40, went to the 40-week moving average. All right. I can tell you that the 40 weekly is very similar to the 40 weekly is very similar to the 10 monthly. The relationship is very close. So monthly turn down, the weekly follow, right? And this is the daily chart. Okay, the monthly chart turned down, red line, weekly slightly earlier, the daily cross even earlier in June. It's July, end of July. So monthly will turn first, and then after that follow. So you find that there will be times during the monthly's downtrend, there will be small correction, small turn up in the short-term turn up in the daily trend. Short-term turn up in the daily trend. But don't forget, this short-term change in the trend and the daily chart is only a correction in the weekly. All right. So if you track all these points, you will find that they are actually the same points. So the resistance in the daily, you don't know where it is. They are actually found in the weekly, and so on. So what I'm trying to illustrate here is that the larger time frame drives the smaller time frame. Principle 1. Principle number 2. All right. When the larger trend is up, can the smaller trend turn down? If the weekly is down, can the daily turn up? When the weekly is down, can the daily turn? I just proven that already, right? Because just now I said the weekly is down, the SIA, but the daily can turn up. But the turn up is only a correction in the weekly, right? I've already said that. I already jumped the gun. When the weekly trend is down, let's change this. When the weekly trend is down, can the daily trend turn up? The other way around. Or when the weekly trend is up, can the daily trend turn down? Yes. Yes. When the bigger trend corrects to the 40, the smaller trend will go through a short-term change in trend, which is what happened in SIA, daily versus the weekly. Correction in the weekly, but the daily short-term trend up. So I can prove it to you in this, showed to you, right? In the city depth chart, there's a correction here. This is the point of the correction. The blue vertical line is the point of the correction. Where did the correction end? It ended at the 40-week moving average, right? And this is the point in time, and this is the price. Exactly the same on the daily chart. This is the price, and this is the point in time, 2nd of June. All right. So the weekly corrected, right, to the 40 on the 5th and 12th of June, and the daily turned up on the 2nd of June. So this is, I think, yeah, it went up there. So if you're looking at the daily chart, you don't know where it will stop. But if you look back at the weekly chart, it stopped at the 40-week. Okay. So we need to follow the immediate larger trend, the weekly, the daily plus the weekly in a correction. You don't know where the daily is going, the weekly will tell you. Third important time frame relationship. Can the smaller trend turn the larger trend? Yes, you can. The smaller trend, because I said in the first place, the first time frame relationship is that the big brother drives the small brother. Then I turn around and ask, can the small brother drive the big brother? It's possible at the market top and at bottom. For a weekly trend to turn, the daily trend must push the weekly. For a monthly trend to turn, the weekly trend must push. But for a monthly trend to turn, actually the daily will push the weekly and the weekly will push the monthly, and so on. Okay, right. So here you can see in this chart, all right, this thing is blocking me. All right, okay, right. SIA daily cross down on the 27th of October. The black line is the daily. All right. All right. So it keeps falling. 1040 cross down daily. It led to the weekly crossing down on the 2nd of February 2011. All right. So this move down over here led to the weekly to turn down. The 1040 weekly cross. Then, thirdly, continued movement of the weekly down led to the monthly also to turn down. So the daily drove the weekly and the weekly turn drove the monthly. And eventually when the monthly crossed, we all know, right? If the monthly trend turns, it can last for years. And you can see SIA was down from 2011. This is a congestion. We define congestion. The 1040 cross each other, the price cross above and below the moving average. It never really turned up. If I put in the quarterly chart, I think this part will be a 40 quarter. I don't have it, but I suspect it will be. And the whole thing just came down. So the daily drives the weekly and the weekly drives the monthly at the turn. After that, after the monthly has turned, the monthly will drive the weekly will drive the daily. The whole thing reverses. So that's the relationship. So the last relationship is what happens to the smaller trend if the larger trend is congesting. This is also to complete the picture. If the larger trend is congesting, what happens to the smaller trend? The smaller trend will go through a series of changes in trend. So for this period, sets a sideways, yeah? All right, sideways. If you understand Bollinger Band, which I covered in the article, it's trading between upper, lower band and the same price range. Monthly trend is in the congestion. For the same period, take my word for it, this is exactly the same period. You can see the weekly trend is going uptrend and downtrend, a series of uptrend and downtrend in the same period. So if you are not sure what is happening, why is there this change of trend, uptrend to downtrend, downtrend to weekly? In fact, if you go to the daily trend, it's even bigger, but I'm just focusing on weekly and monthly. The reason the weekly is going through this very unusual behavior is because the monthly trend is actually sideways. This is true whether it's monthly, weekly, weekly, daily, same thing, all right? I mean, I've studied all this relationship for 10, 20 years. Okay, so now we're done with the theory, all right? There is more theory in the articles, but let me, for this evening, take you through how you actually use time frame. Right? Theoretically, you should monitor the changes in the trend all the time, both uptrend and downtrend. If you are an investor, do not ignore the monthly or even the quarterly. You must follow the weekly, but you must not ignore the monthly and even the quarterly. Follow the impact of the quarterly, monthly changes in trend. See what happens after each time frame changes its trend up or down. Because if you're trading in the weekly market and the monthly turn, you can be sure the big trend will drive the small trend. All right. Sometimes it's not clear. Is the weekly the strong market? Is the weekly trend driving the market? If it's not clear, look at the monthly. If the monthly is not even clear in the monthly, then look at the quarterly. So you keep checking all the time frames. It's not difficult. And at the same time, you should not just monitor the 1040 EMA, you should be looking at the Bollinger Band. All right, you should be looking at the Bollinger Band as well and other indicators. And then from there, you project what is the market's next move at the end of the chart. What time frame? What time frame should you be looking at the end of the chart? Okay, we are almost coming to the end. Now, this is DBS weekly. Yeah? This is DBS weekly. Okay. Let me just quickly explain. The dotted lines are the dotted lines represent crossing down, 1040 crossing down. The blue dotted line crossing down is a weekly trend. The red dotted line represents the monthly trend crossing down. So crossing down, whether blue or red, is downtrend. Continuous line red and blue. Continuous blue lines weekly turn up. Continuous line monthly is monthly 1040 turn up. So what are we seeing? There was a monthly cross, weekly turn up, and then weekly turn down. The weekly turn down drove the monthly down. And then eventually monthly it bottom and the monthly, the weekly bottom and then the monthly bottom. And the two trends turn up. This blue line here means the weekly turn up. At the turn, the weekly drove the monthly up. And then eventually the weekly turned down, it drove the monthly down, and so on. So what is happening now in DBS? This is a weekly chart. There was a bottom, there was a cross up, there was a cross down in the weekly, and there was a cross down in the daily, and subsequently there was a cross up in the weekly and a cross up in the monthly. Okay, this is in the weekly chart. So if we just move on to the monthly chart, the picture is still the same, but you can see the red line represents the monthly turn up, the red line, dotted line represents the monthly turn down. So what is important is that as of now, the monthly actually has turned up. The monthly trend has turned up. And the quarterly trend, what is in the quarterly trend? Quarterly. The DBS quarterly, what trend is it? The 10 is above 40, meaning the quarterly trend is still up. The monthly trend turned up here, right? The last red line is the monthly trend turning up, which is in this monthly chart is the same, all right? The quarterly chart DBS, for your information, in 2008, it didn't cross, the quarterly chart never turned down. It never turned down all the way. In 2018-19, the quarterly trend never turned. So if you realize this, you will see this, you realize that DBS has never turned down in a big way in the quarterly chart. Monthly, yes. But despite all the monthly turn down, the quarterly actually never turned down. And I put in the circles here to tell you, for example, that the Bollinger Band supported it here. This circle is to show you that the 14 quarterly supported here. All right. You can't see it in the weekly chart, in the monthly chart. These these circles are actually the same spot, but you can see that the 40 quarterly supported, and that's why the monthly stopped here, but there's no support in the monthly, but the support only came from the 40 quarter. Here again, the 40, this part here, the 40 quarter supported the price. So if you look back towards it, you can't see a support there. There is no Bollinger, no 40 EMA, no Bollinger support, but the support actually came from the quarterly. So if you are looking at only one time frame, even weekly, you can't see. You have to look at the bigger time frame to see where are the important supports. This is the interesting one. Brent weekly. We're all talking about oil. I showed this chart. Same situation. Now we can shortcut it and just focus on the end of the chart. What is the trend in the Brent weekly? The blue line here at the end represents weekly trend turning up. And that actually happened at the end of 2020. Okay. All the circles here do not represent important levels in the weekly chart. You will find in the bigger charts what the circles mean. Okay. So end of 2020, Brent weekly turned up. This is the Brent monthly. All right. Brent monthly has crossed up. Brent monthly has crossed up. So we talk about the theory, right? When the monthly trend turns up, it can be up for a very long time. So what are we saying about Brent? What are we saying about crude oil? Technically, crude oil is the big trends have turned. Crude oil turned down here in 2014 in the monthly chart, and it crashed all the way till 2015. Recovered, came back down, and now the monthly has crossed up. The circles still don't mean anything. Look at the quarterly. Now you can see the circles. What do the circles mean? The circle in the quarterly chart shows you the 40 quarter supported Brent. The 10 quarter supported the Brent and supported the Brent price here. All right. And this is the quarterly turn down. And the quarterly lower band here supported the Brent price, and it turned. And guess what? Why do I circle this? By the end of this quarter, this last quarter, October to December, there is a very good chance that the Brent quarterly 1040 can cross. So you have to, I'm not forecasting, I'm not giving you a view. You have to learn how the indicators work. And this is an indicator of trend in the largest time frame. So what I've done is to take you through, all right, applying the time frame with just two indicators, 1040 and the Bollinger Band. And with that, as you trace through the movements, especially in the bigger time frames, you will have an idea what the signals are and what is the outlook. Now, the last part of this evening is now 8:33, is for you to ask questions and also for you to ask me to show you some charts. Okay. What I have are actually stock market charts. I have a Meta stock, and I buy data for SGX, and I buy data for currency, and I also buy data for some of the stock indices. So what I have in my database is Singapore stocks, currencies. I even have crypto. I even have Ethereum and also in my database, and Bitcoin and the major currencies. So individual stocks, we can always fish out the weekly, monthly, and quarterly charts. You can request. We have up to 9, correct, huh, Nixon?
Yes,
For
yes.
you to
Actually, we have quite a few questions actually. So
okay, we take questions first.
yes, if any of you want to look at any specific chart, just put it in the Q&A box as well, and then we'll come to it. But let's try to answer some of the questions. So allow me to just look through. We have quite a lot, so let me see. There's one question on, is it possible to get a code of the ADX indicator Mr. Lu used in this box?
It's possible to get
ADX. Do you use ADX?
I don't use ADX
You don't,
directly. That's an interesting question. I created a new indicator called, which is a variation of DMI, and that is covered in my second book. So I do use ADX, but in my own way to pick the market tops and bottoms. But the ADX doesn't play an important role in my set of 3 lines, the plus DI, minus DI, and the ADX. The primary lines that I use from the DMI, Directional Movement Index, which includes the ADX, the 2 primary lines I look at are actually plus DI and minus DI. And it's a little bit complicated. I can't explain, but it is used to, But I do use ADX in a different way. Not to look at the trend, but I use it to pick market tops and bottoms.
Right. So just a bit more information. I think the use of ADX and the DMI is covered in BC's second book. So in this series of 5 articles as well as this webinar, we don't really have the time to cover that. But if you're interested, you can always check out BC's book. What I'll do is I will put BC's link, his website, so you can actually get in touch and get the book yourself. Okay, let's move to the next question. What do you think of the trend of STI versus HSI versus the S&P 500? It seems that the US market is very overbought at the moment, but very strong. Maybe you can look at some chart for this.
We can look at the chart. We can look at the chart. Definitely look at the chart, and I will show you. And there's enough evidence that actually the US charts, although very overbought, there are no signals. Even the daily has not really turned down. Don't even talk about weekly trend. So that's the short answer. We can look at the charts. You want to look at the charts now or later? We run through all the questions, but KIV, looking at STI and looking at, let's say, Dow and
basically the Singapore index, the Hong Kong index, and the US index.
Okay.
There's a question of why do you prefer to use a 10 EMA and 40 EMA? What's the rationale?
Fair question. Short answer is that the exponential moving average versus the other simple, and the other one is actually weighted moving. There are 3 moving averages. It's like the story of the 3 bears. You know, the little girl going to the forest and she finds the bear's house. The exponential moving average gives you the in-between levels. The simple moving average is always too far from the price. The weighted moving average for the same number, if it's 10 weighted, it's very close. 10 simple moving average is very far, and 10 exponential is right in between. Right. So that answers the question why I choose exponential, because it is not too near and not too far. It's like the bed in the forest. The father's bed is very hard and the mother's bed is too soft. So the baby bear's bed. Why do I use 10 and the 40? Actually, the 1040 was something I picked up from a very famous commodity trader from the US. I can't remember his name. He has since died. And he just talked about 1040 EMA, but I completely developed the whole idea of using 10 and 40, what is a correction and what is a congestion and so on my own. And I would say that the 10 represents a shorter term trend and the 40 represents the longer term trend. So if the shorter term trend is stronger than longer term trend, it implies that the strength is in the market and vice versa.
Yep.
You can always try your own. You can always try your own. There is no exclusivity. All right. If you're comfortable with other indicators, other moving average numbers, you can always use your own, so long it works for you.
Right.
What shall I say? I will tell you that I also use other moving average lines as well. Bigger numbers, all right? But my key two lines is always 10 and 40. I start with the 10-40, and then I apply it through all markets, all time frames.
Right. I think a lot of it is also from experience because there's so many EMAs and SMAs and many type of moving averages as well. So everybody has their own way. But I think what is key is basically you have time tested this for the last 20, 30 years, and you have your own methods and system of how to look at the EMAs. I think that's an important thing.
Yeah. And I have to be ethical about it. I have to be ethical. If it doesn't work, I wouldn't use it.
All right. All right. Next question is VC. Do you see fund flows, price action volume when you study your TA? If not, what do you think is the most important to monitor besides chart?
Okay, good question. I don't see funds. I just sit in my room, I look at the chart, I download the data, I look at the chart. So I have nothing else to go by. I'll tell you what if I do a long-term trade, and I do long-term trades, right? I have to apply what I do, right? So if I'm trading, I also must apply some of the things that are floating around the market. Okay. Between fundamental and technical analysis, I will always lean towards technical analysis. So if I have a view, what I do to share with you, I must find a fundamental reason. The fundamental reason, the fundamentals must not be strongly against my technical. If there's a strong fundament against my technical view, I may hold back. If I see fundamental and technical being in line with each other, then it's wonderful. I would definitely take the position. Yeah.
Right. So talking about that, I think the closest thing to fund flow on the chart might be volume. Do you actually look at volume?
No, I find it very tricky.
I see.
Yeah. There are too many gray areas, and we have enough gray areas with indicators that we already have. So because there are times when the indicator doesn't work. So to start with, maybe it's my own knowledge. My knowledge of volume is not very good. The only thing that I sometimes don't get is something called volume, the price volume bar. The price volume bar. If there's a burst of volume on a day, it may signal the top or the bottom of a market. It may, but it's not reliable again. It's not very reliable. If you use meta stock, there's a price volume bar. Instead of candlestick, there's a price volume bar. So I've looked at it for more than 10 years, but after a while, I just take a look at it when something happens, but I don't look at it every day. Yeah.
See. All right. There's a question here. How do you execute your buy and sell decision using your charts? So early on, I think you talked about 1040 talks about the trend, but it's not your buy-sell signal, right? So I think this question is about how do you look for your signal to buy and sell?
Very, very simple. In a way, simple, right? If the market is up, okay, the short answer is I will use stochastics, which is what I wrote about in my book, and I wrote about it in the article. All right, I look for the correction and stochastics in an uptrend correcting down to below 50, stochastic, smooth stochastic correcting down to below 50 and turns up. That's a buy signal. Integrating technical analysis, if you read that part 4, you'll realize that the bottom of the stochastics turning up coincides with the 40 EMA. It does coincide. So if you combine these two, 40 is a natural support. The stochastic going down below 50, smooth stochastic, and turns up, and the price is at 40. You have two signals. So you integrate both signals. In a congesting market, upper band, lower band are the buy-sell levels. They don't always, the price doesn't always get to the upper band, neither does it always get down to the lower band. But when it gets close to it, and there's a buy signal from stochastics below 20, and if it's above, and if the price is trading around the upper band, and stochastics is above 80 crossing down, that's another timing signal. If the market is just trading to the 10, there is not enough correction down. There is no stochastic signal. I'm afraid there isn't. So you have to go by gut feel, whether you trust, whether you have to take a chance, and then you hope that if it breaks the 10, that it will stop at a 40 for the stochastics signal to drop below 50, get down to 20, turn up, then you have two signals there. So I'm telling this because I assume that you have read the timing and the integration parts of the 5 series.
Yeah, it's amazing. It's quite magic how they all
they fall into place together.
Yeah,
I found it so many times in all the markets.
Okay, just for listeners, I've also shared in the chat the link to the Learn from the Pros website. So this is where you can find the 5 articles that the VC has written. And in those articles, it talks about the timing of how he enters using the stochastic. Yeah. And before I move on, I just want to share a quick one. I would also like to invite you all to do your survey, which is on your screen. Just click survey and just answer a couple of questions to allow us to understand how you feel about this webinar and any points that we did well or any areas that we can improve to bring you better educations in the future. So please just spend some time to do that. And not to forget, by doing this, you also earn points towards getting your $50 Takashimaya voucher. Right, so allow us to continue the Q&A now.
Yes.
Let's see. Okay, there's a question on the timing again. I think that one we will, in interest of time, maybe refer to the articles. Okay, this one is more about how you invest, I think. In terms of TA for investing, for a downtrend counter stock, for a downtrend stock, do you actually short the counter using CFD or purchase inverse ETF? So it's not so much TA, but more of your personal style.
Products. No, I can't really answer because I'm not very big in stocks. I do a variety of things. I do ETFs. Yeah, if the trend is down, you know, and I have a suitable thing, I will short the market. I short currencies. And I use exactly the same technical. I shorted the US dollar, 130 above 137. In the longer term, I have this feeling, right or wrong, that it can get lower. I can get to maybe 130 or even below in the longer term.
Right.
But
so the short answer is basically, you use ETF. Yeah,
I use ETFs, or I also trade currencies, and then I just short the currency outright.
Okay. One question here. Okay. In terms of stock picking, do you use a chart to do this? Do you look at sector strength relationship? I think the question is trying to ask, do you use technical to do stock screening?
Actually, I wish I can do more, but I'm not very IT savvy. But if you have good software, and I think some softwares are able to can AI the software to do a screening, but I'm not very, very good. And also at that, so my handicap is my IT is not very good. I think a younger person will be able to. So I'm a little bit old-fashioned. And the other thing really is that we all are limited by our funds, all right. So at some point in time, I switch to funds. Yeah. So because I let the experts, but I would control the risk by looking at the trend.
Right. I think follow up to that is TA can also be used from a top-down approach. Like some of them will just look at the indices, then they'll look at the sector strength, and then from sector they go into the different companies, the different stocks. Do you take that approach?
I think I generally take the overall market index view, and then I go down to the individual stock, because the sector, I mean, if you look at the three banks, you will know that individually you get a sectoral view anyway, and all the three banks individual TA is about the same. That is a sectoral view. Yeah. I generally skip, but I'll look at a number of stocks which are in the same sector, and I get quite a good sentiment. But even within the same sector, some are stronger and some are weaker. So I would decide on the technical of the individual, right? Okay. Let's say all the three banks are up, and then one particular stock is stronger. I may just go for without even looking at the sectoral, because sectoral is a little bit blunt. Yeah, and then overall the STI and the overall index to give me an overall feel of the market.
Right. Okay, I think let's take. We really don't have a lot of time, but let's take a look at one chart. Maybe there's a request for Reference Medical, DBS, Gold, or crypto. So we have covered DBS. So maybe you just pick one, either Reference Medical, Gold, or crypto. PC.
Sorry. Reference
Medical. Reference Medical, gold, or cryptocurrency. Maybe we choose one.
I choose one. Reference Medical, gold. Gold is very difficult. I can tell you that. Crypto is actually a little bit more doable. Technically, it's quite sound. Yeah.
Okay. So maybe you take a look at crypto.
Bitcoin? I do look at crypto. I look at crypto. I look at Bitcoin. I also look at Ethereum. Okay. Let me take a look. Let me call up the chart. Hang on. Crypto. Okay, let me share Bitcoin. Okay, here we go. All right, can you all see?
Yes. You might have to go a bit faster because we don't really have a lot of time left.
Yeah. Okay. I have to switch from chart to chart, so that may take a bit of time. So this is the monthly chart. You can see the monthly chart has actually gone higher than the last high. And you can see that it's uptrend, 10 is above 40. Okay. So the trend is strong. The monthly trend is strong. If you look at stochastics, you look at stochastics to see whether the I need to move this thing a little bit just to see whether it's really overbought. Interesting, okay. You can see that although the price is a new high, the stochastics has not gone above 80, which implies that there is upside. There is upside. Okay, so this is the current monthly bar, and if you look at it has not gone to 90, right? So the last time it was here, stochastics was very high, above 80. So now you quickly look at the weekly. Weekly chart is trading along. Okay. Yep. If there's any correction, I would say that the 10 week will be the natural support. You look at this part, the 10 supported the market all the way. A deep correction in the 40 area, right? So if it can get down to this level, it'll be interesting support. And if you look at that, so both trends are up. Daily trend is also up. So the monthly is driving the weekly, which is also driving the daily. And the market is not turning. So the weekly won't drive the weekly or drive the monthly. So right now, the situation is the big brother is driving the market. That's it.
So the uptrend strength is strong.
It's strong.
Yes.
It's strong. It's strong. Just see whether I can find Ethereum here. Ethereum. Quick one. I think this is it. Yeah, this is it. Sorry, I have to use the template. Is it the same picture? Yes. This is the monthly. Wow. Strong. 1040 is above. So it's important signal. 1040 is up. Monthly, weekly is also up. Right? Stochastics is a little bit high weekly. Okay. Yeah, but not alarmingly. And then daily. Yeah, any correction to the 40 is natural support. So the two markets are parallel. Yep.
Okay.
All right.
Right. Thanks, BC.
Next.
Yep. I think in the interest of time, that's all the questions we can take, unfortunately. But do check out BC's website if you want to. It's in the chat box. I've shared it there.
Thank you.
And
Thank
also
you.
do follow us on our social media, Facebook, Instagram, and LinkedIn, and to keep in touch with what is going on. So with that, I'd like to thank BC for his invaluable sharing, as well as all the participants for participating in tonight's webinar. I hope it has been very educational. I myself use BC's technical indicator when I look at the market as well. So it's always a good guide when you have nothing. It's always a very easy and good guide to know, is it uptrend or downtrend? So do try it and follow articles, and on the link it's all the details are there. You can easily plot it on your chart and have some view about the market and how the counters are moving. So with that, once again, thank you everyone. Thank you, VC.
Thank you, Nixon. It's been great working with you, and I think the audience. I like to say that Nixon has done a very good job guiding us through this evening and taking all the questions. it's been great working with you, Nixon. Thank you.
Right.
And also with
Thank you.
CGS-CIMB. Right.
Thank you.
Thank you.
Thank
And
you.
good night. All the best
Good night,
in your
everyone.
journey. Yeah.
Thank you. Good night. Good night, everyone. Bye-bye.